Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 13th through February 17th. And in honor of Valentine's Day on Tuesday, February 14th this year, the theme for our weekly trading game plan is love. And we still love trading. And last year, you'll see the theme of our weekly trading game plan was also we love trading. And even though this was a bumpy bear market this past year, we still love trading. And we'll share with you some additional reasons why we love trading. And we want to hear from you as well as why do you love trading? What do you love about trading? So we hope that you will adopt this theme and share with us what do you love about trading? Why do you love trading? And share it in our Facebook group. We have a topic in our Facebook group, our Beach Bum Trading Facebook group, where you can reply if you like Facebook. And we also have a topic in the trading psychology channel in our free Discord, and we encourage you again to reply. Let us know why do you love trading, what do you love about trading in either our Facebook group or our Discord, or you can always leave it in the comments to this video below. We'd like to hear what do you love about trading, why do you love trading. Again, some of our reasons why we love trading, and we probably talked about these last year, but I want to add to it is, the freedom that it provides us. We can go to the beach whenever we want. We can do this from wherever in the world that we want, are able to. And we really love our Beach Bum Trading community, and we want to express our sincere appreciation for all the love that you all have given us over the past year. We've met a lot of great traders. We've got a great family of Beach Bum traders in our community. They've shown a lot of love and support to each other. And again, we want to express our sincere appreciation for all of you in our Beach Bum Trading community and all the love you've shown to us and your fellow traders over this past year. So welcome this morning, the Ricky Khan, Nug M, Easy Mike. Glad to see you all in the live chat today. Thank you for joining us. I hope you guys had a good trading week last week. I hope our weekly trading game plan was helpful in helping you make money and succeed in your trading last week. And we'll try to do the same thing again this week, hopefully. So this is our Google document with our notes for our weekly trading game plan. It contains a lot of links to a lot of bonus videos. We've got a lot of bonus videos and the links in our Google document today. Also links to all the tools and resources that we use for our market analysis, our trade ideas, etc. So you can refer back to these. You can find a link to this document in the description box below. We store all of our notes for our weekly trading game plans in a publicly accessible Google Drive folder, and you can also find a link to that Google Drive folder in the description box below, so you can refer back to these notes and or notes from our previous weekly trading game plans. So Nug M says, I love the idea of trading, because once I figure out what I'm doing, I can provide endless possibilities. Absolutely. Again, you don't have to worry about layoffs. You don't report to anyone. You're totally responsible for your own success, and the sky's the limit as to what you can make in trading. So great point, Nugam. Thank you. Okay, so we'll jump in and we'll look at the markets for last week. We'll jump over to the homepage in FinBiz, see how the markets ended up. So it was a little bit choppy on Friday, and we'll look at the indices for the week in a minute. We can see the Dow did inch out a little bit positive. The NASDAQ was a little bit negative, and the S&P was a little positive. How they ended on Friday. More decliners than advancers, about 50-50, but slightly more decliners. Fewer new highs than new lows, so more new lows. We've still got 70% above the 50-day moving average, and we've got 58% above the 200 moving average. And you can see it ended up bearish, but, it was pretty choppy, pretty split. Heat map wise, you see the FANG stocks, they were up earlier. We'll talk about in my humble opinion, irrational exuberance, and it's good time for me to throw out my not financial advice disclaimers. We're not financial advisors. None of this or any of our videos should be considered financial advice. So again, we'll talk about again what, in my humble opinion, is irrational exuberance after the Powell press conference or Powell interview, and then the reversal we saw Thursday, Friday after that. So some of the news: clock is ticking on a stock rally. Busy week. S&P turns in worst week this for the year. Oil, we saw run back up near 80. There was some news. Russia was cutting back their production, and I really don't think that had a whole lot. We'll talk when we look at the futures in oil. We'll see. In my humble opinion, again, I think oil is pretty much range bound between 70 and 80 right now. In general, natural gas did make a recovery, and again, when we see the futures, we'll see if we can see if it's a really established a bottom. It's going to turn back up or consolidate there. Gold took a hit when the dollar strengthened some. We'll see gold and silver, and we'll see some potential opportunities there. And again, the futures on the NASDAQ are negative right now. Dow and S&P are slightly positive. The euro, again, the dollar strengthened a little bit, so the euro weakened and then recovered some. And the bond yields went up a bit later in the week as well. We'll again see all this in the futures and see a better trend in the futures. So we'll look at each of the indices. Look at the SPY first. So again, on Wednesday, when Powell had this interview, again, my humble opinion, we saw some irrational exuberance. They tried to run the markets, particularly tech. And then Thursday, Friday, that pretty much reversed itself, and they declined back down. Saw a little bit of a recovery on Friday, or an attempt at a recovery, and it didn't really go anywhere, but we can see the S&P still sitting above the upper trend line in this narrowing channel. We'll zoom out to the weekly, get a better idea. So again, we can see that 50-week moving average is still providing support. Got a little bit of a doji from last week, so again, indecision whether we're going to go up or down. We'll look at the NASDAQ, the Qs. He attempted to break that 50-week moving average, and now is kind of pretty much sitting at a doji. So again, indecision whether it's going to use that 50-week moving average as support and try to make a push up, or if it's going to break down below that moving average and decline further. So again, a lot of indecision as to which direction the market's going to go next week. We'll talk about some of the economic news. We've got CPI. I think it's on Tuesday or Wednesday. We'll see in the economic calendar, and that's going to be a pretty decisive piece of data as to how the market behaves, in my humble opinion. So the Dow is pretty flat, pretty consolidating. It's hugging that moving average, is providing support. That's good. But again, consolidation pretty flat. Good morning, Walter Lyons. Thank you for joining us. Glad to see you as well. Hope you had a good trading week. So we'll look at the VIX. The VIX did pop up a little bit towards the end of the week. Initially, when the Powell interview, again, the irrational exuberance had declined down into the 18s, I believe. And now with the reversal of that, we got a boost back up, and it's now sitting above 20. Let me see what it's currently sitting at. Right now, it's sitting at 2053. When we get to the futures, I'll talk a little bit more about what I expect with the economic data in terms of volatility in the VIX. And tomorrow, we'll probably talk in more detail about how we're playing going into the CPI read, playing volatility and playing the VIX. So let's look at groups quickly. Oh, let me look at the Russell IWM. I know at one point they did try to push. You see, the Russell took a beating. on Thursday. They did try to push the Russell briefly on Friday a couple times, but it pretty much got rejected. So we'll look at it on the weekly. Again, you saw that double top, so there's heavy resistance above on the Russell, and it looks a lot like the SPY. So got an inward, inner bar, and again, it's still sitting above its average. But again, it's getting rejected. Every time they tried to push it on Friday, I saw the shorts that we're watching, which is SRTY and TZA. They would go green briefly and then get pushed back down. So again, we've got this heavy resistance at 200 on the Russell. So let me get the chat back up. And this was interesting as well on Friday, as we've been talking about these sector rotations, and we kind of suspected the past couple of weeks we've seen an exodus, money flowing out of the defensives, out of energy, out of utilities, out of consumer defensives, and into these more growth and more volatile areas. And then on Friday we saw a reversal of that. So for the week, energy is now the top performer, and communication services and consumer cyclical, which were a couple of the top performers the past couple of weeks, are now at the bottom. Technology is in the middle, but again, I expect more of this type of rotation, particularly if we see the CPI data come out hot. I would expect a pretty dramatic rotation into these more defensive sectors and out of the more growth risky areas, so risk off if the CPI is hot. Basic materials, you can see for the week, is still near the bottom, and I think there's an opportunity in there. We saw silver, gold got hit, steel, aluminum, etc., all got hit this week. And again, I wouldn't be at all surprised to see a rotation back into basic materials, which had previously been outperformers with energy. So again, my humble opinion, I think there might be an opportunity in basic materials. For the month, again, we're mixed. We still got technology, communication, and cyclical are still the strongest for the month. So again, I expect more money to flow into utilities, energy, basic materials. But again, particularly if the CPI is hot. If the CPI comes out less than expected, inflation less than expected, I expect them to, I think we'll get another dose of irrational exuberance, and I think they'll try to run tech and communication services again. So again, that's, my opinion. So we'll really be watching that CPI data. So let's look at the calendar. First, I'll bring up the calendar in investing.com. I'll review some of our notes for this week. The Powell speech, the main takeaways that I got from that were he didn't really say anything different than they've been saying. Higher for longer, got to kill inflation, job market's still strong. The term that was kind of new and latched onto was disinflation. I guess somebody quoted that he said disinflation like 11 times or something. And I'm not going to go into the semantics of it, but disinflation is not a deflation. Disinflation just means inflation is weakening. It doesn't mean that prices are going down. It just means they think they're starting slowly to win their battle in inflation, but they keep reiterating, they've got a lot of work to do. You've got the other Fed presidents coming out and they're talking, they're still talking about, rates above 5, higher for longer. There ain't no pivot coming anytime soon. The market's still not listening. So after that Powell speech, they tried to run tech in particular on Wednesday. Volatility dropped off, tech popped up, and then that all reversed Thursday, Friday. Actually, late Wednesday, Thursday, Friday, that all reversed. Some other interesting comments as I listened to the State of the Union, and here's my takeaways from Biden's State of the Union is they're going to quadruple the buyback tax. I believe it was 1% before, so now they're going to, it sounds like a 4% tax on stock buybacks. So it's surprising that companies are still announcing, huge stock buybacks. Meta announced a huge stock buyback. I think some other tech companies announced some significant tax or stock buybacks, even though they're getting hit with this tax. But again, the shareholders like that, their stock price goes up. There was a lot of comments about cracking down on big pharma prices. I don't really think that's I won't express my opinion, but watch the big pharmas getting hit, biotech getting hit on that news. Also crack down on social media, so your social media stocks, potential and negative for them. Talked about a billionaire's tax. I don't know that that's necessarily a positive or negative relative to stocks. We'll have to see what comes of that, if anything. There was a big push for Buy American, so I think that's notable in that we want to look at American companies that can replace foreign companies, particularly Chinese, with supplying critical components to our supply chain. So there's talk about minerals, critical elements, etc., and they're making some significant investments in those areas. So I think keep an eye on that. There's some opportunity, I think, if we follow that theme going forward. So we'll talk about all of this in more detail and as something actually comes of it. Again, we'll look at the other data in the calendar in a minute, but I did want to comment on the Michigan sentiment data that came out on Friday. It was a little better than expected, so consumer sentiment is a little better. Conditions were a little better than expected, and inflation, although inflation was actually higher than expected, and the 5-year inflation was pretty much in line. So although there was a little bit of volatility, they tried to run the markets up a little bit. It didn't really have much of a positive result. So let me grab a drink a sec and I'll zoom in and we'll just look at the details of the economic data from last week, and then we'll see what's coming up on next week. Okay, you guys are having a good discussion about the CPI data and how they're changing their calculations, etc. Yeah. Okay, so let me zoom this up a little bit. See if that's okay. That looks a little better. So Tuesday we got imports. Imports is up some. Exports was down some. Trade balance was negative, but better than expected. Here's our Powell speech on Tuesday. So Wednesday, Thursday was Tuesday they started running, and then it reversed Wednesday and Thursday, Friday. So again, we've got other Fed speakers, and those all caused some volatility. Mortgages came down a little bit. Inventories in line. Crude oil inventory, you can see it was pretty much as expected. Didn't really have much of and it's a build and pretty much in line. Again, that the data, I don't think they're trading it based on the data or the news. I think it's trading much more technically. Again, that's my opinion. Gasoline inventory is way up. So then Thursday, we got jobless claims data, and it was a little bit higher. Continuing is a little bit higher. Initials just a little bit higher. But again, all this says the job market's still strong. So again, the Fed can continue to be aggressive, hike rates without fear of damaging the job market. And these layoffs, they're not impacting the overall job market. Now, one of the points I've heard is I hear these people being laid off from the big tech companies are getting nice severance packages, so they're and not, I won't make that comment right now, but um, I don't think they're going to contribute much to the jobless claims data. These layoffs you're hearing from the big tech companies. So that's my opinion. Um, we saw the sentiment data. We see the rig count number is increasing. Well, that tells us there's more supply. So really, there's more supply coming in, and they're building inventory, etc. Even with this Russian cut, but again, the price went up. So again, I don't think it's trading based on the data. It's just purely technical, in my opinion. It's just bouncing between 70 and 80. And we'll see that in the futures as well. So let's look at next week's calendar. Easy Mike's commenting on the natural gas. You'll see the same type of thing. When was the nat gas? So it had a big drawdown, and the price did eventually go back up, but there was not a strong reaction to this piece of data. We used to get a real strong reaction when that data came out, and a lot of volatility, and it would whipsaw the price, and we're just not seeing that anymore. So Monday, not much. Tuesday is the CPI data. So that's when we're going to get the critical economic data. If this comes out worse than expected, expect the markets to react violently to the downside. If it's better than expected, again, in my opinion, I think we're going to get a irrational exuberance to the upside. And again, I would expect them to try to run tech and biotech and communication services and cyclicals. If it's negative, I would expect money to flow very risk-off defensive. So this is going to be and I expect the VIX to pop, at least some. It'll pop if it's worse than expected. It'll drop precipitously if it's better than expected. And again, we'll talk more in detail tomorrow about particular stocks, ETFs, etc., that we're going to play regarding that CPI data. And for next week in general, we've got some retail sales, industrial data, standard oil, natural gas inventories, building data, and then we've got PPI data on Friday or Thursday, along with jobless claims. So this is front end of the supply chain. So this is also a potential source of volatility, along with jobless claims. So Tuesday, Thursday look like the critical days for volatility and moving the market. Not much on Friday. So hopefully that helps. Also, just a reminder, Friday is also options expiration date for the February monthly options. So that's also a source of potential volatility as well. Good morning, Tony Roses. Thank you for joining us. Glad to see you as well. And then the next Fed meeting isn't till the end of March 21st, 22nd. But now we've got the Fed presidents all out speaking and differences of opinion, etc. The market is listening to these and trying to guess what they're going to do in March. But I believe if I look at the calendar, I recall, I don't think there's a meeting in April. So I think it was March and then off April and then back May, June, if I recall correctly. Earnings, we're still, in the heart of earnings season. There's still tons of earnings. Earnings matter again. Again, you can listen to our video about how to play irrational reactions to earnings. Also, just a reminder, we have a channel in our Discord called Earnings Reports. We have an automatic feed from this Twitter account, EPS GUID account. So as earnings come out, they get automatically posted to the earnings reports channel. So you can get that data as quickly as that comes out. Also, I post this economic data. We have a Surf the Markets channel, and we also have an automatic feed from Market Watch Economy, so articles interpreting this economic data get automatically posted to the Surf the Markets report. And again, you can see I post the data as soon as I can from investing.com as it comes out. So join our free Discord. Our Discord's free to join. You can find an invite in the description box below, and get access to all that data. Again, it's all for free. So again, we've got just tons of earnings in all kinds of sectors. I know there's some gold, there's some software, Palantir, there's some solar. So I'll let you look in at this calendar in detail, find out any particular stocks of interest to you or in a related sector. Because again, you can get sentiment moves if someone in a sector reports poor earnings, and it might impact other stocks in that same sector negatively, or conversely positively if they think, okay, everybody in that sector is going to do well because somebody reported good earnings. Now, it seems to be very mixed in the sectors. You can have one company in a sector do well, and then others in the same sector do poorly. And that comes down to management and how they're managing their business. So I'll show you in a minute in FinViz or not FinViz, and Webull, where you can see a shorter term calendar of the earnings as well. But it's really easy. If you go to investing.com, bring up the earnings calendar, you can see the full list as well. So I hope that helps. Check the chat a sec, see what we've got going on. We'll jump over to Webull. We'll look at the market screen. Just a quick reminder while I check the chat that Webull is still offering their 12 free stocks. So as you can see, we use Webull for our market analysis, for our due diligence. For the vast majority of our trading, we actually do in Webull, and we really like the 4 a.m. to 8 p.m. trading hours in Webull. And again, if you're not already using Webull, you can see you can get 12 free stocks. The first 2 when you open an account, and then another 10 up to 10 when you fund the account with at least $100. And each of those free stocks is worth anywhere from $3,000 to $3,000. So again, if you're not already using Webull, we recommend it. Again, it's our favorite trading platform. We use it again for our market analysis, due diligence, and the majority of our trading, as you'll see in all of our videos. So yeah, we'll look at, I see you guys are talking about volatility in the VIX and stuff. We'll look at the futures, the VIX futures, and again tomorrow we'll talk in more detail about how we're playing that volatility. Again, the Tuesday, Thursday seem to be the days for the most volatile economic data. So Friday, advancers, decliners, you can see it was pretty split, and we have a large bar on both sides of a small percentage. So again, another indication, in my humble opinion, of indecision, a tug of war going on. They don't know if they want to pull it up or down. And we see a reversal of the money flow. So past couple weeks, we've seen the NASDAQ had more outflow. This time we saw the NYSE had more outflow. So again, a reversal from what we've seen the past couple weeks. So that's interesting. And here in the calendar tab in the market screen in Webull, again, this is the online browser version of Webull. If you go to the calendar, you can go to earnings. You can also see dividends and splits, but this will show you a near-term calendar of the earnings releases, so you can see who's coming up soon and whether it's after market close, before market open, etc. So let's look at the best performing industries for the week. So we see energy, both oil and gas, uranium outperform. Pharmaceuticals was pretty neutral. Again, the Biden speech, there's some headwinds in terms of pharmaceuticals. Financials, banking didn't really do anything. Chemicals didn't do anything. Utilities, again, we saw some rotation starting into utilities. Again, oil and gas, healthcare is pretty mixed. Again, so the theme's mostly energy. Look at the ETFs. See the directions. So right now up on the Dow. Mid cap. Okay, so we've talked about for a while some potential positive rotation into mid cap, small caps. So up S&P. So right now they're batting up. VIX, UVXY, again, increased volatility. This is how, again, we play volatility on the upside. This is a long on the VIX, bullish leveraged ETF on the VIX. We're currently long UVXY. This is how we're playing the increased VIX going into the CPI, PPI data. There is, looks like another one. So there's all these VIX are pointing up. Russell's pointing up, and FTSE China's pointing up. So it's good. That's good to hear that your uranium play is working for you. Easy, Mike. Yeah, they've been rotating in and out of uranium, and also we've been talking about solar for a while. I'm going to talk about solar tomorrow. So I've got a potential play for that rotation in solar that we'll look at. So aerospace defense, energy, positive, communication services, negative, utilities, positive. Same thing we saw in the sectors in FinViz. Here, basic materials is showing positive. So again, that's support for my thesis that I think we're going to see some rotation back into basic materials. We saw consumer defensive, real estate. That's interesting. So we didn't see strength in the real estate sector in FinViz, but here we're seeing some. Financial services, that's interesting as well. We'll talk about some trades we've been doing at FAC, which is short on the financial services, and we'll talk about potential opportunities in that tomorrow. Commodities, agriculture, again, we'll see volatility, natural gas up, we talk UNG up, wheat, agriculture, again, natural gas, wheat. Asia is positive 7 to 10 years, 3 to 7 years. So bonds, we'll see, eventually did recover a little bit. And we'll see the foreign currencies when we look at the futures as well. So, okay, so let's jump over to the futures and let me grab a drink a sec. Okay. So we can see, how the Dow is pretty much, it's just been chopping up and down, pretty much consolidating. S&P again started to run up and then down. They tried to push it back up a little bit on Friday, pretty much, failed. Same thing with the Nasdaq, although the Nasdaq looks like it's in more of a decline. Kind of did the gap fill on that wick, so Nasdaq looks like it's downtrending. Dow could still be consolidating, and S&P is pretty indecisive. Russell's kind of following the same trend shape as the S&P. Looks like the European market kind of peaked. Same thing with the DAX. Here's the VIX. Again, we saw it, it kind of bottomed in the low 18s, and then, initially when that Powell speech came out, that Powell interview, we got that, again, my opinion, irrational exuberance. It dropped back down into the 18s, and then Wednesday, Thursday, Friday, it bounced back up. Now we're sitting above 20. 20 is kind of a psychological support level in the VIX, so below 20 tends to downtrend, above 20 tends to uptrend. We'll see what kind of spike we get in the VIX on the CPI, PPI data. Again, recently it's been reacting pretty quickly and violently. So if CPI is worse than expected, expect a pop in the VIX. If it's better than expected, expect a plummet in the VIX. So again, we'll talk about tomorrow how we already talked a little bit about it, how we're playing the volatility around the CPI, PPI data. We see, oil tried to pop up to this 80. We see it's, again, my opinion, it's pretty much been range bound for quite some period of time. It peaks a little bit over 80, and then it drops back down to a little above 70. 75 is kind of a pivot point as well. So once it, drops below 75, it heads to 70, bounces back up. When it gets too much above 80, it tends to decline. So again, we're not doing a whole lot with oil now. Shorter term trades, we'll talk about this more tomorrow as well. You can do short term trades on these swings, up and down with gush long, drip short, or UCO up, SCO down, whatever your preference is. And we'll look at those ETFs again tomorrow. Same thing with natural gas. Now, natural gas, it looks, like it's got a reasonably stable bottom, but it is very volatile. So right now, it's just been kind of consolidating that bottom. It'll take a little bit of, further data to see if we're getting a swing back up or if it's just going to chop up and down at that level. Saw this plummet in gold and in silver, and it was more severe in silver. Again, potential gap fill here, so there's potentially more downside in silver in terms of this gap fill here, and we see a doji candle there, but there's plenty of upside. So when it does reverse, I think there's potential there. Again, gold looks like it's probably falling off and might go down to this 1800 or 1850 support level, and then we'll have to see if it swings back up towards 2000 again. So same thing with palladium. We saw it drop off. Again, dollar strengthened and that hit all the dollar-denominated commodities, particularly gold, silver, etc. Not so much oil, natural gas. They seem to be pretty divorced from the dollar strength. And then we see this volatility in the agricultural sectors. So I know Easy Mike was talking about DBA, which is a basket of agricultural products. It looks like orange juice finally peaked and rolled over, but I don't have an ETF to short orange juice, unfortunately. Wood, so lumber rolled over after making, pretty significant run. Coffee. So bonds, pretty much trailing down, prices going up or yields going up, prices going down. Again, we've been saying for quite some time that the yields need to go up to compete with the Fed funds rate, etc. So the more hawkish comments we hear, the more the bond prices would expect to decline. And then we'll see what happens into the Fed meeting on the end of March. So again, we saw the dollar strengthen. Again, that hits the dollar-denominated commodities, brought the euro down, British pound down, even the yen down some. Okay, so let's talk about our strategies. Given all this data, how are we going to strategize? What trade ideas do we have going into next week? And last week, our theme, our title was "Be fearful when others are greedy," and it's possible that others were taking note of that as well. When we saw that irrational exuberance after the Powell interview, possibly others were watching the fear of greed index as well peak out, and decided that was a good time to be fearful and sell, and then we saw that decline. So as a bonus, I put together several shorts with some of our comments from last week that you can view via these links in our notes. So we'll be releasing these as we're able to. Similarly, we've got, we looked at the seasonality of trading in February, and I've got a short video on that. So if you missed that or you just want to see the short version, a lot of these shorts, some of our BeachBum traders were requesting shorts and snippets of some of these strategies uh, due to their schedule not being able to join us with our live streams and still wanting that information. So I'm trying to accommodate that as best as possible. We talked about the January Barometer, so I'm also we have a video on what is the January Barometer, what does that mean, and then I've also got this short as to what was the January Barometer say about stocks for 2023. So that one's still a little bit under construction. Some of these are still under construction. I need to do the descriptions and all that before we release them, but you can view the videos. They're shorts. We talked about layoffs. I'm working on another short on what we've talked about in terms of layoffs, and you've seen that companies now. Disney came out with a layoff, a cost cutting measures, and their stock went way up. So again, this is a theme. Companies have figured out if they announce a layoff, a cost cut, the market likes that, so their stock goes up. We talked about subscription-based companies and hardware, software, and again, we're seeing that in companies reporting their earnings that they're seeing a decline in hardware, software purchases as well. Um, we talked about the hype in Chat GPT and AI and last week as well, and this is still ongoing, and we'll talk about this in more detail. I plan to make more videos, hopefully, if I can find the time, but I wanted to share with you this article I found on 20 AI stocks expected to rise by 85% over the next year. So you can read this article via the link in our notes and see which 20 stocks that MarketWatch is highlighting as AI plays. Again, I'm working on more information about AI stocks that we have in our database and my opinions as to what the best plays are. But also, I want you all to be aware of the hype cycle. Are we at peak hype in AI? I think we're close. It's on all the news. Everybody's talking about it. So we may be but we're very close to peak hype. You also then heard about when Google came out with their Bard and did a demo, and it didn't perform as people expected it to. Google plummeted. And really, does that have anything to do with Google's current revenue, their current earnings? Why did it plummet based on that demo? Now, they also I'll talk in more detail. I maybe have to do a separate video about both Microsoft's announcement and Google's announcement about how they're planning to use their versions of the technology for Chat GPT. But I'll just give you the summary opinion is I was disappointed with how they're planning to utilize that technology, and in my humble opinion, I think they missed the boat. So again, I could talk about that in more detail in maybe a standalone video. Also, we have this series of videos on, if you're not familiar with ChatGPT, don't know how to use ChatGPT, we have a series of videos on our sister channel, Virtual Consulting 101. that explains what is ChatGPT, how do you use it, etc. And I'm coming out with some of examples of how we're actually using ChatGPT right now. Um, so I get some questions, etc. I'll talk about a couple other major categories of that we're now focusing on right now, given the current stock market situation. As we're looking at dividend-paying stocks and ETFs, so you can get paid while you wait. We're releasing a number of videos. You can see the first one where we showed you how to find the best dividend-paying stocks in FinViz. We're also working on our Google Sheet, as we've talked about, on how to find dividend-paying stocks that meet your criteria, our criteria, that we may want to buy in the near term. And the first of those videos you can see as a bonus via this link in the Google document. And again, we'll be releasing a whole series on how to use that Google Sheet, our enhancements to it, help you find what kinds of dividend paying stocks, again, so you can make money while you wait for the market to recover in whatever direction you want. Similarly, so tomorrow we'll review that in more detail, the enhancements we've made to our dividend payers Google Sheet, and how we're going to use that to identify stocks we may want to buy or put on our watch list for this week. Also, similarly, we've been talking about our continuing to rethink and evolve our options trading strategies, particularly around covered calls and puts, cash secured puts. And we have a couple questions out there. If you have experience in those areas, we would love your feedback in those areas. But again, we'll go into this more detail on how we're using this puts ROIC, return on invested capital, Google Sheet in detail, and our enhancements to it in more detail tomorrow. So again, please come back tomorrow, watch part 2 of our weekly trading game plan, and we'll go into more details in all of those areas. As you can see, we've got a lot going on. So a last question for you all, and then I will take some quick questions from the chat, is along the lines of talking about dividends. There is a Twitter account that I've seen others quote called Dividend Hike, which is reporting on companies that are increasing their dividend. I haven't seen them report any dividend cuts, but they do report increases. And the question is, do you all want us to have a channel with dividend hikes or dividend reporting data as an additional channel in our BeachBum Trading community Discord server? So I'd love your feedback. You can comment on the in the comments below or in our Discord. We also have a suggestion box. You can reply there, or and you can we welcome all your suggestions. We'd love to hear your recommendations for improvement in any areas for our videos, our Discord, our weekly trading game plans, etc. We love your feedback. Love to know what you think of all of this. How can we improve and help you succeed in your trading career? Again, that's what we're here for. That's why we do all of this. That's our objective, is to help you succeed in your trading career in any way that we can. So let me see if there's any last minute questions, and then we can wrap up. So if I missed anybody's questions in the live chat, please post it again. I apologize if I missed it. You guys can always post any additional questions in the comments below this video in our Discord. Again, you can find a Discord invite to our Discord in the description box below, in our Facebook group. You can also contact us via any of our social media sites. You can find links to all of our social media sites, including to the invite to our Discord, link to our Facebook group on our homepage, which is beachbumtrading.com, bum without the U. So again, in the links section, you can find links to all of our social media sites as well as trading platforms, all the trading tools we use. Last week we used the Fear and Greed Index, which is there under references. So I use this link section as a quick reference to get to everything I want to for our trading. So we hope that helps. And again, please share with us, what do you love about trading? Why do you love trading? Again, in the topic in our Discord, in our Facebook group, in the comments, etc. Again, in honor of Valentine's Day, let's share, why do you love trading? So thank you all for joining us today. And we hope to see you again tomorrow at same time, same bat channel, 10 a.m. Eastern for part 2. And we'll select our individual stocks for our watch list, for our swing trading watch list, for our bullpen, our shopping list, etc. And again, as I mentioned, we'll talk about dividend stocks and options opportunities that we're developing. So we hope this all helps. Good luck and have a great day.